Hey, it's Derek Lockery from the Lubin Group. Hope you're well. This is your weekly market update. Honestly, it's a little bit of a quieter week than we were anticipating. Typically, this is jobs week, first week of the month. Every Friday, the BLS, the Bureau of Labor Statistics, releases their jobs data for the previous month. However, we did just have a partial government shutdown that was avoided, but with that partial government shutdown, that is going to delay some of the jobs data that we were going to get this week, notably the BLS jobs report that would have come out on Friday. We will not be receiving that this week. Hopefully, it's not delayed too much since the shutdown didn't last very long. However, we did get the ADP jobs report today, which is private payroll. So that, in a way, with the markets, kind of functions as the de facto jobs report. Market was looking for about 48,000 jobs to be created, and we did have that come in pretty light, kind of consistent with what we've seen in prior months. That came in at 22,000 jobs created, which normally would be a very good thing for mortgage rates. That typically, when job growth slows and the economy looks like it's slowing down a little bit, or inflation is going down, typically mortgage rates are going to go up. However, the markets kind of shrugged that information off as there was a statement released from the Treasury regarding their quarterly refunding report. They've basically said they're going to continue to issue the same amount of treasuries that they have been, and there's not really anything that changed, but they did add a little bit of verbiage into that report that basically said in the future they could need to issue more. So bond markets have kind of shrugged off the bad jobs data and also are looking at it now. They're not overly concerned about this comment. Typically, if the government's issuing more treasuries, then that has to be absorbed by the bond market, which can have an adverse impact on mortgage rates in mortgage bonds. Mortgage bonds are what directly impacts mortgage rates, but they didn't commit to it. They just said there's a potential chance they might need to do it, essentially. So not too much into it, as that's pretty far off into the future that would potentially be needed. So right now, rates have been pretty flat the last week. There was a JOLTS report, or the job openings and labor turnover report, that was supposed to come out yesterday. We didn't get that with the partial government shutdown. So right now, really just kind of waiting to see what these reports come out to. Mortgage rates do look like they're in a pretty good spot to turn around and head a little lower. So right now, we'll keep a close eye on that. And we are in full spring market right now. I've been saying it for the last couple of weeks, but almost every single person we've had put an offer in has been in multiple offer situations. So it is starting sooner than it has the last couple of years here. So just make sure you're prepared. If you see a property you like, you want to be ready to act on it. So let us know before you go look at it. If there's any numbers that you need run, we can send you payments, cash to close estimates for those properties, and make sure that you're in as good a spot as possible to act with an offer should you need to do that. And then we'll keep a close eye on the markets and how it's going to impact rates going forward. And if there's any questions we can answer for you on this or anything that you need, just let us know. Happy Wednesday. Have a great rest of your week.